Hello, my name is David Song, and I'm the financial analyst that you asked for help on stocks and bonds. So, one thing you asked was how do companies make money investing in stocks and bonds? Well, through stocks, you have two ways. One is through the capital gains, where over the course of your holding, the stock price appreciates and you sell for a price higher than what you paid for. Another way is through dividends, and there's multiple forms of dividends. And dividends is where the issuer pays capital to the shareholders. And I'll get to the types later. So one thing you asked me about was calculating the price, the value, the just about bonds. You gave me several parameters such as the par value, the stated interest rate, the semi-annual payments, and the maturity of 20 years. But could you clarify what you mean by interest? If you are meaning interest in the annual yield, this could be taken by the annual yield, which is taken by the par value and multiplying by the stated interest rate divided by twice due to the semi-annual payments. But unlike stocks, bonds are not compounding. You would sum up every subsequent year of the bond, which is 20 years, and what you add up all together is the total yield of the life cycle of the bond. So you could have also meant by the current market rate, the market interest rate of similar bonds. If the current market rate is below the coupon rate, then the bond should be trading at a premium. And then conversely, if the current market rate is above the coupon rate, then the bond should be selling at a discount. This market rate or the discount rate would be somewhat correlated with similar rated bonds or the 10-year treasury note, which would also be known as a discount rate. I don't have the information to find the market rate right now, but we can talk about it later on. So another you want to ask me about was I want to talk about dividends now. So the most common form of dividends is through a cash dividend, where the company issues the dividend to all shareholders. The money is deposited in a bank account and of the percentage of the holdings of the investor. But another form of dividends, with a pay of capital, is through a non-monetary dividend. This is known as a property dividend, where the issued property dividend would be recorded against the market price of the assets distributed. The but yeah, another form could be a script dividend. A script dividend would be paid out, it'd be issued out in the forms of promissory notes, which would be paid out to shareholders at a later date. And another form is I'll be talking more about is a stock dividend. If any company issues additional shares to common shareholders without any the action is a stock dividend. But if I'm pretty sure if the company issues less than 25% of the previous issued stock, they will be treated as a stock dividend. But if the issues of the new shares is more than 25%, I want to get to the next point, which is this issue of shares will be treated as a stock split. Now, what a stock split is, the stock split is a corporate action, which is usually decided by the board of directors, which increases the number of outstanding shares. This is done by dividing each shares into multiple ones. And what usually happens from this is the stock price usually diminishes. And then I want to talk about the risk of bonds and stocks. So usually bonds are less risky. And a major reason for this is that bonds must carry out the promise of the issuer to retain to return the face value of the security of the person holding the bond when the bond matures. And on the bonus side, many bonds, most bonds pay investors a fixed rate of interest income that is also backed by a promise. Yeah. So, but yeah, and then the other side, you have stocks, right, which have a non-guaranteed dividend. So yeah, you have a non-guaranteed dividend, and you have a risk of this. Yeah, so the company has no obligations to make these payments. And um, yeah, so I think I should have answered all your questions. Yeah, thank you so much I'm so glad to talk about this stuff with you. And thank you very much. Thank you for your time.